the monetary sector, the monetary aggregates. Sorry about the sector part. Okay, so we're done with the monetary aggregates, which is M1, M2, and M2 plus slash M2, M3. Okay, so now we're going to try to talk about what money, the characteristics of what money is. Okay, you go in a shop, you go with an asset that you have. If someone is able to accept that asset that you have to get the good and service that you have, it means that it has these following characteristics that we're going to try to talk about here. Remember, the definition for money is simply that money is simply any asset that is accepted as a mean of what? Exchange for goods and services. So, acceptability, it means that money must be acceptable. People should accept it according to how it is. So, you go in a shop, you just show them the currency that you have. If it is for Zambia, then someone is able to accept it. It means that this money is acceptable. Acceptability is there. We can as well talk about durability, which means that money should be durable. Okay, if money is created for a year, it shouldn't just last that year. It should the money should like last for a long period of time. Okay, it shouldn't just get damaged after a period of time. The wear and the tear is what we're talking about here. Okay, portability, we're simply talking about money being portable. It should be easy to carry around. Okay, you can put it in your purse, you can move around in your pocket. Money should be easy to be carried anywhere. You can just hold anywhere. Example, a good example that I can give is, for example, in Zambia, we had the currency that we had back then, while the 100 kwatas were like different, right? We just had the maximum money as 100 kwacha, right? Maximum currency that we had, which meant that if you have 500, you're going to have those 500 kwatas, right? And it won't be as portable as it is right now to carry the 500 that we had as 5 notes, or carrying just one note as a 500, right? So if you have 10,000, you'd carry more notes than compared to now. Okay, so that's what we're talking about, portability. Divisibility, we're simply talking about the money. That money should be easy to be divided into smaller units. Okay, stable in value. So if at all inflation was to grow, money should be, if you are going to change the value of that money, okay, the currency that you have. So if you're saying that the 20 kwacha you can buy bread, in a 20 kwacha you can buy one bread. So if inflation goes up, it should be reasonable enough to say, okay, you can no longer get one bread at 20 kwacha. You can rather get one bread at maybe, let's say, 25 kwacha or something like that, because of inflation. So inflation can act as a big role when it comes to stability of the value of the money. The most important part of this money, or the characteristics, is scale. So money should be scarce. It means that scarcity will create demand for money, right? If there's demand for money, people demand for more money, and the banks can simply raise the interest rates. And if they do so, money, the borrowing, of course, might reduce, but that's not really the reason. So, but scarcity will simply mean that money should be hard to find. If money is hard to find, you know the value of money. It will have more value compared to limited money supply. Okay, if there's too much supply, it means that the value of money will be as though compared to when money is not scarce. If money is scarce. Okay. So now moving on to the legal tender. So money must be money. You know that money is confirmed, right? So money is confirmed by the what's this, by the government and everything. So when you go in the shop, people must accept the money, because that money is accepted by the what? The government. Okay, the government confirms to say this is the thing that we're doing. So the origins of money, I'll just tell you a short story. I won't bother reading through all these things or talking about all these things that are here. I just want to tell you a short story about all these things that are here. So the thing that's the origin of money, what used to happen back then was, to you guys that watch movies, yeah, you're going to find that back then if you there were things that were being used as money, right? You'd use rice, you'd use cattle, you'd use different things, right? Just commodities, and you highly put them to be part of money, right? So now you'd find that money will only be recognized according to the demand. So demand is mainly plays a role in the biggest of something being called money. If you do not have demand for something, we can't call it money, right? So back then there was high demand for pigs, I mean goat, rice and salt, cattle, gold, what. But there are too many things that were being used as money, right? Anything could be used as money. But now, the most important thing that was being used as money back then was gold and silver and all those things, right? So you'd find that there were people that were called goldsmiths. These people are people that if a rich person has gold, right, they would get that gold and go give these people to keep that gold for them. More like banking, right? Something like that. They get that money and that gold and put it to them. Not everything though, but they'll just get that money, I mean that gold, and put them with them. And then those goldsmiths would act like a bank in a way that a commercial bank in a way that if someone comes to them and says, "Oh, I want you to lend me this much," of course they would leave out some gold for that person and um, lend the person, the borrower that came in to borrow money, right? So once that is done, you find that they would give them a receipt. Okay, the receipt that is saying that you borrowed this much, Mr. P borrowed a 500 kwacha gold from us. Okay, now that kind of borrowing, Kylie, but you know God, how God is. God, you're going to find that you're supposed to put on a thing, you wear it, you then you look at how heavy it is, then you tell to say, okay, this is how much and that is how much. But it was too inconvenient. It doesn't make sense even at this point. You get what I'm saying? So those people that were getting the seats started getting those receipts and giving, if they owe someone and that person goes to them and tell them to say, no, you give me money, they'll just get the receipt and give them and tell you go get the money yourself, bank. That person will go and claim the money. So the goldsmiths saw it and they were like, oh, okay, these people are now using more of the what's this the banks, I mean the gold that we have in they have in with us, but they're using more of the receipts that we give them. So now they started printing out more of the receipts than giving out gold. Okay, which made those people to be using more of those receipts as money. Okay, people just stopped using money as gold as money. They just started using those receipts. Or I'll just go to you, I'll give you the receipt, I tell you to go get the money yourself, and you get the same receipt you give someone else, just like that. Not until the goldsmiths were like, okay, we're just creating um this paper, these receipts as money. Okay, so the goldsmiths actually participated or contributed to this part of the money being made as in paper. After this was created, the banks or the central bank was created in England. Yeah, it was formed as a monopoly. It was the only monopoly bank that created currency, by the way. It issued paper money. So like it started from copied from using those receipts and started printing out money. So that is the history or the origin of how money came in and how we are using money as paper. Okay, that's my story. That's simply the short story that I've told you guys. Now, kind of money. We have kind of money. We just don't have any kind of we don't just have money as money anyhow. We still have what we call as kind of money. So now we have what we call as fiat. Okay, fiat is simply the kind of money that can be used there and then, like your cash, your bank shanshani, your bank currency, and all those things. That money is simply what we're calling as what the fiat. So this one you're going to use it there and then. Without wasting time, this is simply the money that we are simply talking about that is highly liquid, because you can use it there and then. Whenever if you want a good today, you get the good there and then. Okay, we move on to the IOU money. So the IOU money is simply, I come to you, I tell you to say, you give me a 2 kwacha, I'll give you later. You give me a 2 kwacha, I owe you that 2 kwacha, right? It means that you have money. That's kind of money. Okay, the IOU is still money. And we also have cryptocurrency. Cryptocurrency is the kind of digital money that we now use as digital. You find that you trade money, currency, you just trade currency and all those things. You don't physically get the money, no. They'll just give you maybe Bitcoin or what coin, all those things, but you get the money in dollars, maybe US dollar, you get kwacha, you get what, but it's digital, like, okay, but it is money because it uses the blockchain platform, okay, which is digital. So yeah, you find that you also have the electronic money, which can be used in the checks, credit cards, debit cards, electronic payments, and e-money. So you go in the bank. So this is what we're talking about. This is the ATM, the coins, and all those things. Okay, I think let me cut the video here, subscribe to the YouTube channel, we're continuing the video from the central bank. Okay.